Hey, good morning, everybody. Long weekend. Happy Monday. Halloween tonight. What does that have to do with trading? Absolutely nothing. But we have a lot to talk about today. Let's talk about the month of October, which is coming to an end today. Okay. The Dow is up 14.5% for the month of October. Dow Transports, which are like shipping companies, rail systems, up 12.5%. Tech is up 5% for the month of October. So understand, nothing goes straight up. There must be some consolidation, especially since if you look at the trend, and I'll bring it up right now, we'll share the SPY trend. The SPY is the U.S. markets. So we go back to the end of the year. If you can see, if you were to draw lines from the top going down and lines from the bottom going down, we are still in a bear market. We are in a rally in a bear market, yes, but please don't think necessarily 100% the bottom's in, because we still have the end of the year. And I'm not saying anything major is going to happen at the end of the year, but we have next year, and we are heading into recession if we're not in recession already. And if we're not in recession, being the US economy, you have to see what's going on in Europe. You have the war with Russia, Ukraine. You have all those things that's going on in the UK with their prime minister not having a prime minister leaving, energy issues in Germany, all of Europe. There's currency issues all of Europe. There's grain issues for feeding people. There's just so many issues in Europe. Not to mention, let's talk about what's the funny part about China. Okay, real quick. If you look at casino stocks, because everything is stock related, everything that I talk about relates to various industries or stocks. So let's look at the casino industry. Okay, here's what you have going on in China. China is opening up an e-visa, so now people can travel to Macau. More gambling. That's great. However, China is also reinforcing lockdowns. They just locked down one casino, 700 people until November 1st for like 3 days. They cannot leave their rooms in the casino. Next, you have gaming license up for renewal. So there's going to be an announcement within the next 2 weeks. So you have Las Vegas Sands, you have Wynn Casino, you have 6 casino entities that are in China. So what could happen? Their gaming license can be cut. They could be like, hey, you can't game here anymore. You have no license, Wynn Casino. What are you going to do? So again, those are just things that I look at. Understand, I used to trade Wynn in 2020. I traded it like 83 times for a profit of 2,500%, and that was stock only. Okay, major occurrences this week, and we will talk about the SPY, my challenge coming up, Moomoo, how we're going to make money. Because understand, I'm not here just to talk. I want you to make money. I want to make money. I already have my game plan set in stone. So let's go on and just talk about a post I made over the weekend. I spoke about having an exit plan. And people said, how do you have an exit plan? How do you plan something? So I'm real simple, and I'll talk slow. This is how I devise an exit plan. When I enter into a position, and I'll use a firm, for instance, I was bullish Affirm going into earnings, Affirm, AFRM last week. So Affirm was at $18 and change. It went down to $17.14. I saw support, so I bought a number of calls from my account. So how do I choose my exit strategy? Well, it sounded ridiculous at the time. Affirm was going down. My exit strategy was like $20, $21 on Affirm. Affirm's at $17. I have 1 week to execute my trade. But how did I come up with $21 as an exit strategy? Because I looked at the historical charts of Affirm. The same way we look at the SPY on a daily basis, and I talk about SPY support or SPY resistance. And when it hits the resistance, it usually drops. And when it finds support, it usually bounces. This same is true for stocks. So we went into Affirm calls last week. I picked Micron puts last week. Micron was at $55.30. And what happened? There was bearish divergence. And my exit strategy, I looked at the charts and I said, if Micron goes down to $52 and change, I will exit out. It went from $55.50 that day all the way down to $51. If you exit out at $52.50 because that's part of your strategy, that's a good trade. If you look at the glass half empty, which I'm guilty, I do it. I'm like, damn it, I left 400% on the table. Damn it, I left. So you have to understand your trading strategy before you go into a trade. You could say, okay, I'm going to scalp it, meaning I'm going to get in. I'm going to ask for 20%. I don't trade with emotion. I just want to make money. If I put $1,000 in and I'm looking for 20%, that's $200. If my entry was good, I should make that 20%. You're not really caring where the stock or the ETF is going for the remainder of the day. That's a strategy. Other people that have a more comprehensive strategy might say, like I did, I'm in this at 18. I expect it to go to $21. At $21, it might resist. I mean, let's talk about a firm. It went to $22. And Micron on the way down, I'm out at $52.50. It went down to $51. So I'm not saying I'm still in those positions. I'm not saying I'm bullish a firm or bearish Micron. I make trades. I don't trade with emotion. I mentioned Palantir a couple of weeks ago, and somebody said, that's a great stock. You should be holding that stock long term. And I said, I don't even care what they do. I care what the charts look like. Okay, so I mentioned lots going on this week. We still have a ton of earnings Monday through Friday, okay? And you want to see which companies that you're interested in if you want to make earnings plays. What else is extremely important this week? Fed is coming out on Wednesday. 100% they're saying 75 basis points raise. But what's going to be more important is when Jerome Powell speaks at 2 p.m. and the notes are dropped, and I think he's doing a press conference on Thursday. So now you have Wednesday afternoon until Thursday, where he's going to talk about whether the Fed is seeing recessionary factors, what the Fed is seeing with PCE, CPI, job numbers, and whether they're thinking about 25 or 50 basis points in December, which would be bullish for stocks, or if they say 75 basis points and they're still extremely hawkish and aggressive. Let's understand the Fed is still reducing their balance sheet each month by like $100 billion as far as like treasuries and bonds and things of that nature. Okay, as far as today, what do we have on tap? We have PMI numbers coming out, but then there's the 6-month and 3-month bond sale that will be announced at 11:30 a.m. So definitely check the markets around 11:30 a.m. There should be some rockiness. If bond sales are weak, could push the market down. If bond sales are strong, it could strengthen the market at that time, okay? Next, Tuesday, not huge, except for it starts my $500 account challenge. What am I planning to do? Well, first, I signed up to Moomoo. I use the link below, put in $100. I got 5 free stocks. And now if you use our link below before December 20th, you get a $10 coupon. That's like a 40% return. Me, what did I do with my $100? I turned it into $2,500 in 8 trading days. Then what did I do? So many people reached out on YouTube, DM'd me on Twitter, people on the platform, and they said, I missed your entries. I missed your exits. I don't see it. And the people on Webull are like, I never see your posts. Yes, they get blocked. So that's why I joined Moomoo. Okay, but the point is, turned $100, $2,500. I now put $500 in my account. It's going to start tomorrow, Tuesday. I'm going to trade that $500 to $10,000 before the end of the year. That is the goal. In order to follow along, it's not going to be posted on Webull or Moomoo or Twitter. It's going to be posted on SOC-platform.com. That's our Discord. I have my own channel. So I'm going to say, okay, I bought this option. I bought 1 contract. I paid $98. If you're following the challenge, rule number 1, pay less than Matt. If I go in and I say I paid $98 and you want to follow the challenge with your $500 account, you say, I'm going to buy the same position. Some of you will pay $98. Some of you will pay $105 and chase. The smart ones will be like, he paid $98. I'm going to put in for $91. I will take a 7.5% discount. What's likely to happen? At some point trading, you're likely to get it for $91. I paid $98. If I add additional options, I will add that under my channel. When I sell, I'll be like, here's my exit strategy. Again, exit strategy. Plan ahead. Now, we do that because we've seen stocks spike and dip. You want to get out when your option looks most attractive. If you're holding a piece of shit and it's down 50% and all of a sudden the stock or ETF spikes or dips, your piece of poop all of a sudden starts looking like silver. Now it looks like gold. But when it spikes, that's what you want to sell the gold. You want to get out of it. And then if it drops back down to piece of poop area, you say to yourself, oh, it worked for me once. I'm going to re-enter the same trade. Okay, so we've got the Fed coming out on Wednesday saying 75 basis points, and they will likely talk about the increase for December. Now, what else are people looking to hear or listen to? They're looking to hear if the Fed's talking about tapering the rate hikes, meaning there are all of a sudden, they like to talk about a year out. Okay, well, we see in the third quarter or fourth quarter of next year, we're looking to hesitate on the rate hikes and we're going to bring them down. Well, people like to get in the market when the rates come down. So when they hear 2023 quarter three rates are coming down, and how can we predict that? I mean, the Fed's been wrong about everything for a year and a half. So I don't pay that much attention. I look at the current situation. I base everything on history. I already showed you, if we look at the market and we go back, again, I wish it had a 3-day chart. It doesn't. It gives me a 1-day or a 1-week chart. So here we go at the end of the year, December. So if you go top line, top line, top line, you can see where my cursor is, top line, we're still in a bear trend. Bottom, 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 bottom. Yeah, that means we can still see something like 340, 350 on the SPY. Do I think it's happening this year? No, but it can easily happen next year. Things aren't all of a sudden just going to magically get better for everybody. Okay, so next, what do I do in my pre-morning prep? I look at the rates. The 2-year, the 10-year, and the US dollar. I mention this every day. Why? As rates go up, it makes it more expensive for our markets, and it's an immediate effect. If you see the 2-year interest rate, you can Google it, the 10-year, I will look at it on marketwatch.com, or the US dollar, all of a sudden spike up, then you know the markets are ready to drop or they just dropped, and it makes sense. So, and sometimes we see like a crater, like it'll drop real quick and then come right back up. That happens in the rates. The rates get hit because of a bond sale or something to that extent. The rates drop, they go back up quickly. But okay, the 2-year rate is 4.476 this morning. Let's remember, it ended last week at 4.40. So it's up 7 basis points. Let's also remember, towards the beginning of last week, it was 4.60. Okay, extremely high. So last week when we were having a banner bullish week, right, 4 out of 5 days, market going higher, okay, rates were going down. Same with the 10-year. The 10-year was 4%. It went up from 4% to 4.30%. Now it's back down around 4% as we ended last week. This morning, it is up 4 basis points. So again, you have the 2-year up 7 basis points, the 10-year up 4 basis points, making our markets more expensive. Then you look at the US dollar, okay? The US dollar is $111.18, okay? As we ended last week, it was 109 and change. It went down from right about 112.5 or 113 all the way to 109. So when it drops from 113 to 109, no wonder our markets were strong last week. And then my favorite, we're going to get right into the SPY in 1 second, because I made a posting over the weekend and I pointed out, and I'll pull up the chart again, that the SPY, and let me get to my chart here, and we'll go to the 5-minute chart so we get the full day. It's sitting right around 389 and 390. Understand that 389 and 390, let's go to the 45. I wish we could just pull up hours. Here was hours. Let's go to the 1 hour. And okay, so as we sit here at, let me just pull it up. Okay, 389 and 390, that's been rejection in the past. So when I go over my SPY ranges, I'll give you them from the low side, because again, understand, we're in a bear market. We're in a bull run in a bear market. We have a ton more earnings this week. Probably over 30% of companies in the stock market are reporting this week. I'd say probably about 27%. With that said, okay, you have to understand the ranges of the SPY. So on the low end, 371, and it goes up about every 4 points. So 371, 375, 378, 381. 385, and then 389.90. Now that's an important level. And you know what? I might as well take this out so I can show you guys exactly what I'm talking about. Okay, get out my whiteboard. Here we go. So here's, let's get the camera. Whoa, geez, almost, that would be funny, right? Okay, so here's our SPY levels for last week, okay? As you can see, we are still going up. Now what can happen over here at 390 is we could start to come back down. It might look like the bell curve. You all remember bell curve from back in high school or college. It goes up to a certain point, curls around, and then you lose your efficiency. Now, when we talk about the SPY ranges, 371. Next way up, 375. Now, what this is this is support or resistance. So the fact that we're at 378, 381, 385, 389 to 390, it's a key level. If we go up, you're looking at 393, 397, and then 401. Again, if the bull run continues, that's exactly what you're looking for. However, I was looking for it to reject this level and hit some type of consolidation. Let me get rid of this, and we'll talk about what consolidation is, okay? Consolidation is when something goes straight up. Now, I just showed you the chart, so I made a smaller chart, okay? When something goes straight up and it's just going up, 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 like the month of October, it has to come down and consolidate and basically find a new base level of where it's going to go and springboard for there. So if you're bullish, you're saying, okay, consolidation is actually healthy. I would look for it to come down. And let me just come up, bring up my SPY chart again. So again, we went from 363 on the SPY to 390. So that's 27 points. That's about 8%. So the market, and we already know because I started off the this live stream by telling you the Dow is up 14.5% for October. So if you're a bull, okay, let's hop right into psychology now. If you're a bull in this market and the Dow has been up 14.5% for October, and you say to yourself, well, November and December, we usually close out the year good. So is November, let's combine those months, November, December. Do you think the Dow is going to go up another 14.5% for those 2 months? Probably not. These are the same analysts that told you we were going to finish the year on the SPY at 340, 350, 360. Then some people made predictions 420, 440, 450. It seems to me that nobody's right. People are either extremely bullish or extremely bearish, and we are right in the middle. But understand how strong October was. So please, guys, if you have any questions, ask them on the sides. That's why I'm here. I want to make it an interactive session for everybody. So people say to me, okay, well, how are you going to trade today? Let's talk about a strategy session. What am I thinking as far as today goes? Okay, so we come up with two scenarios. We'll come up with a bull case scenario first, and we'll say 5 out of the last 6 days in the SPY was inflow. Even though there was bad earnings, every time earnings came out bad, they bought up the stock, whether it be Amazon, Google, Microsoft, which had disappointing earnings, went on a tear. And then you have some companies that had neutral or semi-positive earnings, like Apple. And Romeo gave a killer alert on our Discord on Friday about Apple. As the market opened, he does his live streams a little 15 minutes earlier. Instead of talking about Apple calls, I'm going to stay in them, he said, even though when Apple was consolidating a little at like 10:30. And what happened? Apple just went up, 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 up. And it went up like 8 or 9%. I don't know where it finished at, but it had a ridiculous run. There was no weakness in Apple. But things have to consolidate. So Apple will find a consolidation level. Now, here's the catch. If you look at some charts, here, let me draw one out for you here. If you look at some charts and you look at, let's say, Amazon, Google, Alibaba, usually when there's a dip, they get a rebound, but sometimes there's a further dip. So you had earnings come in, the stocks dipped, whether it be Meta, right, Amazon, Google, and you see the rebound because they're just buying the dips. However, sometimes when they buy the dips, a few days later, let's say this is last week right here. Now we're back up here. We're way from the low. We're up here. Now, this week, let's say this week is bearish and there's consolidation. Why? Because there's Fed talk. There's job numbers. We are in a struggling economy. Here's the thing about Europe. They're having energy crisis. I mean, China's got its issues. We got the war. So there's so much stuff. So what could potentially happen is we could see a lower level for Meta, Amazon, Google, tech. We can lose that 5% that was gained in the past month. We can lose it back if the markets turn ugly. So historically, markets get good right after midterm elections. When are midterm elections? Well, they're next Tuesday. They're November 8th, Tuesday the 8th. So generally after elections, and they settle if there's like a count off and this and that, I would wait. But generally, the market gets good. So what could potentially happen leading up to midterms? Well, we've heard that word consolidation because I've mentioned it 38 times on this live stream. So what could happen is after we move from 363 on the SPY all the way to 390, which is 27 points, we can consolidate. So this week, and this is the bear case scenario, consolidate, and we could potentially go back to like 380, 377, 375 on the SPY. It could take a number of days with some bad news. We're still in a bearish trend. We're just in a bull run. So again, two scenarios heading into today, how I do my planning. I say if they buy up the dips, okay, which they've been doing. So if they continue to do what they do and it's still a part of a bull run, and that happens today and maybe a little tomorrow, I would be more hesitant to say we'd be in a bull run on Wednesday or Thursday. If I were going to make a prediction, I would say Monday red, Tuesday green, Wednesday, Thursday red. I'm not sure about Friday because it's 4 days out. So out of the 4 days that I gave you, Monday, Tuesday, Wednesday, Thursday, I think 1 green, 3 red. Okay. Again, that would be going against the trend. That is a strategy going in. If we see green, yes, that strategy wouldn't work, but I could acknowledge it. I would watch and be like, oh no, they're buying it up today. They're buying it up. There's no dip. I'm not going bearish, because you never want to be the first person to say, this is the top. This is the bottom. You can have it in your mind. And I'll talk about Friday real quick. When the SPY was going up, I'm like, oh my God, at 388, I think I'm going to get puts. And then I said, no, it could easily go to 389 or 390. Why do I want to enter early? So the point is, although I have the strategy and idea to be a bear in the market and think 389, 390 is going to reject, I said the best time to enter a trade might be right before the market closes. All right, so let's talk about some stocks, and I'll mention some stocks that I'm looking at. If the market's bullish, what I think of certain stocks, and if the market is bearish this week, where I think I can make money. Again, it's my watch list. Top of my watch list, UVXY. It's an ETF that gauges volatility. Now, do I invest in it? I do occasionally, but I also think it's manipulated. Meaning, on ugly days, it should be spiking higher, and it doesn't. And then on average days, it's just dropping like 3, 4, because that ETF is made to go to zero. That ETF gets rebalanced every year or 2 years. It's made to go to zero. So the SPY closed at 389 after hours on Friday, up to 390. What did I say rejection could be? 389, 390. So if you're watching the SPY this morning, okay, and where's it sitting pre-market? It's sitting at 387, down 0.5%. Okay, what would I think? Let me just close it. Okay, so we could easily fill the gap where we ended on Friday after hours to 389. So the market could dip it open very quickly, 10, 15 minutes, and then all of a sudden just shoot up. And I only mention that is because we saw it on Friday. Any dips that happened, there would be a large position or a large order that all of a sudden would buy up that dip. So it's impossible for me to say that that's not going to happen today. However, it's likely that history repeats itself. So when I look at certain market movements on Friday and I'm like, okay, it looks like it's going down here, and then all of a sudden they shoot it up, that's one institution buying it up. And I saw it multiple times. Every time I thought, okay, this could be it. We could dip back down to the next level. It didn't. It showed support in the market. Again, that's why it was bullish. I mean, this is your Friday chart. It's just strong as can be. You look at the 5-day chart, it made up the gap. Now, what could easily happen? See this plateau right there? It can easily drop back down. I'll draw you a picture so you know exactly what I'm talking about. So here's what the SPY looks like. It drops down here. Then all of a sudden it ramps up here. Okay, so this being a plateau where we're at right now could either, I'll give you a dotted line, go higher. Okay, bull scenario, we dipped, we come back up and we go higher. Bear case scenario is, we've seen it happen before. It just looks like a plateau. So we were down here, we shot up for a few days, and then it comes right down to this level, which would make sense for consolidation. It falls right in line with my other drawing. I should make an NFT and sell this. Anyway, so that's kind of what I'm thinking about today and this week. If I'm thinking that the SPY is coming back down, I see 377 as a support level. So if I'm going to get bearish on the SPY, again, two strategies. Bearish strategy first. If I'm going to get bearish on the SPY, I'm going to say we see 377 on the SPY, possibly Thursday after you have the Fed announcements on Wednesday and the Fed, what is it? Not an interview. It's a press conference on Thursday, Jay Powell. If I were going to get bearish on the market and I look back at the chart, I could say, wow, okay, so we just moved from 375 all the way to 390. That's 15 points. history tends to repeat itself. If we're at 388 or that we closed at and you add 15 points to that, it brings us right up to 403 on the SPY, which if you remember, and we have to go back a few months, 404 was a rejection or a support level on the SPY. So when I say 403, again, I go by the level. So it's probably going to be 404. So a bull case scenario. This week is bullish. Let's say the Fed comes out and they sound dovish. Okay. We're sitting at 388. We could end the week at 403 on the SPY. Yeah. We could end the week up like 15 points, which would be, do the math real quick, like 4%, right? It's a full week. We've seen the market move 3% in one day. Now, bear case scenario, again, we sit at 388. I'm seeing support at 377. So we could technically spike at some point Monday, Tuesday, be at 393, and then all of a sudden drop from 393 to 377. So again, that's kind of what I'm looking for. If I'm going to get into puts, I'm going to wait for more of a rejection level. And again, we've heard the term double top, triple top, double bottom, triple bottom. That means support. Double bottom, it found support once. It found support again. Double bottom, it hit the bottom twice. Triple top, hit the top, rejected. Hit the top again, rejected. What are you going to think is going to happen the third time? When it hits the top, it's going to get rejected again. All right, so again, I mentioned I would talk about a few stocks depending on the market. I'm following Chevron and Exxon. Why? Because big in money, big institutions, earnings came out, the stock spiked to all-time highs, and they were selling the stock into the all-time high spike. I'm looking at Pinterest. Pinterest is more of a speculative play. The point was it's up 13.75% on Friday to just under $25. My view on Pinterest is it kind of plays a head and shoulders from $25 and a quarter all the way down to like $23. So if I see it hit $25 and change and I'm ready to get bearish on the market, again, you need to see the market reject. If you're going to buy puts on anything, you need to see the market reject. If the market's still going to be bullish, then everything's going up. I mean, most everything, 90%, 80% of stocks. But if I want to get bearish on Pinterest because it tends to reject $25.25, then I'm going to wait. And when I see the market reject, then I'm going to say, okay, if the market's rejecting, Pinterest can reject. If the market goes down X%, Pinterest can go down more because, again, it's one of the shorted plays. It was up close to 14%. Plays that I would be bullish in a bullish case scenario. Intel was up 10% after earnings to $29. Intel, if the market is bullish this week, could run to $33, 33, 32, probably 32, like 70 if I had to give an exact number. But seeing that that's up over 10%. So Intel can move 10% in a bull or a flat market. If the SPY goes between 390 and 400, Intel's going to be at $32. Okay. What else? Apple could consolidate major day on Friday. I'm not trading Apple because I think it's a little overvalued based on the earnings, so I'm going to stay away. But Amazon's at 103. So again, Amazon, I mentioned when it went to 97, you could either see a bounce from 97 up to 103, I probably said, or you could see it drop to 97, spike up, and then drop down. So Amazon's interesting because if tech and tech earnings get hurt later in the week, Amazon, which was at, what was it at last week? Even on Friday, it was at $97.66 on the low. What we've seen sometimes, and back to this one, this chart is dropped after earnings, slight rebound, and then what happens is it drops again and it drops to a lower level. We saw that on Alibaba. So I'm keeping my eye on Amazon. I'm going to see where the demand is. But if the demand or the market sentiment changes and we consolidate or go down or in a bearish direction, I believe Amazon could drop back to $97, even a little lower, because when it drops lower, it usually outperforms where it dropped the first day. So it dropped to $97. I think it can go to 94. Bear case scenario again. I have a scenario for each stock on my watch list. Micron. So again, Micron Technology, it had, well, I'm not going to trade this unless it hits the high. T-Doc is interesting. I know Kathy bought a shitload of T-Doc. This chart looks a little ridiculous. So again, similar to Pinterest, if there is a pullback, right, and the outflow was happened when they were selling it that day, and then the inflow the last day on Friday, volume wasn't even that strong. But the point is, if they decide to sell T-Doc, I could see T-Doc pulling all the way back down to $26. If it's at $29.55, and let's say it's bullish for Monday and Tuesday, so it goes up to like $31.50, and then Wednesday, Thursday, Friday get bearish, and you get in at $31.50, you can get out at like $27. Again, over a 10% movement in stock, your options would return over 100%. So these are just things that I'm looking at. I'm going to see if there's any more plays here. Caterpillar's been predominantly strong. Again, Dow play. If the Dow is stronger than tech this week, and if the markets are green, Caterpillar could go higher. It's like a Lockheed Martin, though. It's like you're chasing it. Lockheed was $394 a couple of weeks ago. Now it's $450. That's huge for defense play. Caterpillar, equipment play. Caterpillar was $178. How do I know? Because I was talking about it at $178. And that was literally a week ago. Now we're at $218. So would I want to jump on the Caterpillar train? No. But again, that's something you could trade in between a day trade, because if the market's beaten up and it rebounds, then I would get into something that I know has demand, like a Caterpillar. If I find Caterpillar at the bottom and I think the market will rebound. So again, you have a different strategy for each of these things. I have McCarrickson up there, Merck up there, Texas Instruments. I'm looking at Meta. Meta is the same as an Amazon. In fact, Meta still has outflow. So rather than Amazon, if I was going to get bearish on a big tech stock, it could potentially be Meta. The same way I could see Meta bounce, but when Meta dropped, and I think it dropped to like $92, and it's at $99 right now, I could easily see it doing one of those rebound up, faked you out, and it's back down. So that's the play I'm looking for. Okay, let me see what kind of questions you guys have on the sidelines, see if we can answer any of those. So Head and Shoulders, good morning. Apple going anywhere? Chinese factory is closed. Yeah, so I mentioned China before. This is what's going to happen at the end of the year. China is still going to have COVID lockdowns, okay? The same way the U.S. is getting hit by VSR, which is a new virus, the flu, which is an old virus, and COVID, which is a third virus, okay? China has the same thing. Europe has the same thing. South America, everything has the same thing. I'm happy living in Florida right now because we're not getting hit by VSR. It's happening like all around us and above, going north. Point is, what is going to happen when China starts making these restrictions and close down? We're not even in November. So you have November, December, January, February, March. 5 straight months of usually when flu season is at its worst. 5 straight months. Now, here's what happens in China. Say you have just the normal flu. I've got the N1, whatever it is, flu, right? How do they know? They're not testing you for the flu. So you're sick. What are they going to do? Lockdown, timeout, lockdown, factory closed. So yeah, I'm certainly not trusting China. If I was going to be bullish anywhere, it would be U.S. stocks. I wouldn't want to be in Europe right now. I certainly wouldn't want to be anything revolving around China. Maybe like a Baidu or an Alibaba, like the Amazon, in case there's lockdowns. Those companies might do okay. But yeah, I would stay away from China. I don't believe China. Okay. Let's see. Bullish on Square earnings Thursday. Interesting. I don't know so much about Square, but very similar to Square is Square, Affirm. And we saw what happened to Affirm. Affirm had bad earnings. It dipped like 8%, and then they bought it up. How do I know? Because that was one of our lotto plays that we returned over like 100% on. So you're bullish on Square. Ken happens to know Square like family. I talk about it less than knowing Square. So I will mention Coinbase. Coinbase also has earnings this week. Coinbase is more interesting to me because Kathy owns a ton of Coinbase. Coinbase is doing head and shoulders. 75 seems to be the top. 63 to 62 seems to be the bottom. We're trading at like 72 right now. The reason Coinbase interests me is because they lose $1 billion per quarter. $1 billion per quarter. Let's just see what Coinbase's valuation as a company is right now. Okay. $16 billion. The whole company is worth $16 billion, and they lose $1 billion per quarter, Coinbase. What does that tell you? It tells me that in 4 years, if they don't change anything, they will be out of business. So what's likely to happen? Coinbase is likely to raise more money. But going into earnings, I'm just looking at Coin. Again, I'm just seeing head and shoulders. Let me look at Square with you. You definitely know Square. If you're bullish on Square, I would be bullish on Square without even looking. So dude's bullish on Square. You got the last 8 days inflow. It's gone from $53 to $61. That's up about 16%. It's hard for me to jump on the bandwagon. Now, if you're like Ken and you understand Square like family, he could be bullish and he could be like, going from 53 to 61, 8 points is nothing. He could be like, Square could be at $79 after earnings. That would be up a whole 33% from where we sit now. So I don't know your opinion, Ken, but I'm going to ask you in Discord what you're actually thinking about this. Is I know you know a lot about Square. Me personally, when something runs for 7 straight days of inflow, I would stay away. I'm glad you stopped me from buying that SPY put on Friday before close. I would have been cursing all weekend. Yeah, I mean, if I'm going to get bearish on the market, it's not a bad thing to hold something over the weekend. I don't like to hold anything over the weekend. Why? Because I don't like to stress over anything. That's what he's basically saying. Somebody asked me about something. So I'm talking about trading without emotion. The last thing I want to do over the weekend when I'm spending time with my family, going trick-or-treating with my kids, and Halloween's tonight, is worry about, okay, after hours, the market was up, right? The SPY was up from 388 to 390 pre-market. So you go into the weekend, you're like, oh man, it sucks. I'm down. The market's going to open up on Monday. Shit. Oh man. And then you get to Monday morning and you're probably up at 4 a.m. and you're like, oh great, market dip. And then what happens is the SPY goes from 386, where it was at 440 this morning, all the way to 388 again. So you just make yourself crazy. Understanding pre-market, less than 1% activity of the market. During the market, when the market's open, understand over 50% of the trading activity happens in the dark pool. So you, me, him, her, we don't even know what's going on. They could be trading hundreds of millions of dollars, billions of dollars, and we don't even know what position they're taking, which is why it's so important that you check dark pool levels, that you use the flow and algos room. For anybody that's not here, I'm sure we have a link below to join our Discord. You get 7 free days. There's flows and algos. So you type in, you see where all the big money is going. Say you like DraftKings. You type in, where's the big money going to DraftKings? You'll see they're either bullish or bearish. You don't have to guess. If you're bullish a stock, you're like, I love Carnival Cruise Lines. There's a chance everybody else hates it and you're getting in following last week's action and it dips this week, or vice versa. You could be like, oh, Carnival moved so much last week and now it's going to dip this week, but everybody still could be bullish on it. Okay. What do I think about Pfizer? Okay, so I happen to like Pfizer and Merck and maybe even Johnson & Johnson, okay? They are consumer staples to our economy. Say there is COVID, flu, other outbreaks. What's going to do well? Even if the market struggles, Pfizer, Merck, Moderna, maybe Johnson & Johnson, I would have to research them more to pick a favorite. I would not tell you this is what I would invest in. But I do, and I have been looking at Merck lately. But again, if the market pulls back, you're going to get a better entry. If I'm looking at Merck, I'm going to look to get in at $92.38. It's at $100 this morning. So again, if I'm a long-term investor, there's some stocks I'm going to wait for a pullback on. All right, any more questions or comments? Hey, Matt, gratitude for the info. Will I explain inflow and outflow data? Sure. I'll explain it. I'll try and keep it very simple for you, okay? Inflow. Let's just talk about any stock or any ETF. It doesn't matter. We could talk about the SPY. We could talk about coin. So what's happening is you have shares that are being asked, shares that for the bid. So the bid side, people want to buy the shares. The ask side, people want to sell the shares. So as the stock is going down, if the ask or people that want to sell the shares are selling into the bid, that is outflow, meaning people are getting rid of their shares. Oh, you want to buy it? Okay, you can have it. What are you willing to pay? $1? Here you go. Oh, you're willing to pay 99 cents? Here you go. There's outflow. I'm getting rid of shares. There's more downward pressure, and I'm selling at the bid. If I'm selling big positions at the bid, and you'll see that because on your service, and generally most platforms are the same, when you're looking at tick by tick and they're showing you 10,000 shares, 20,000 shares, 40,000 shares, it'll show you green. Green means somebody went and paid the ask. Red means I sold it at the bid. So if I'm selling at the bid, it's forcing the stock down. That is outflow. If I'm buying the ask, and all those apes know what I'm talking about, buying the ask, AMC, GameStop, when they're pushing up, they're buying the ask. That's inflow. People can't get enough of it. It's the supply and the demand curve. So again, that's why I simplify it. When I see green inflow days, that I know there's demand for a stock. If I see red outflow days, I know there's more supply than demand, thus pushing it's the supply and demand ratio. More supply than demand, push it down. More demand than supply, push it up. You go to a grocery store, they have a carton of eggs. That's it. And you need to get an egg. This is my GameStop example. When everybody was shorting GameStop, there were only so many shares left of GameStop. So it's like going to the supermarket. They have a case of eggs, 12 eggs left, and 22 people want to buy eggs. 22 people want to buy one egg each. There's only 12 eggs. Well, the price goes up. I'll pay $30 an egg. I'll pay $35, $40. Okay, sold, $45, $50, and the stock keeps going up. So that's exactly what a short squeeze is and things of that nature. Okay, so let me just see what we got else here related to source species with other market. No clue what that is. All right, gotcha. Thanks. Awesome. So again, you should have two strategies on the SPY or on whatever trade you're going to do. You have your bull case scenario. Your bull case scenario says they were buying last 5 out of 6 days. Until I see something different, I'm going to buy the dips. Now, again, when I trade, I like to wait until at least 10:30 in the morning because the spreads between the bids and the asks narrow. If the spread is $1 and $1.50 and you're like, I'm going to buy it, and you pick a midpoint of $1.25, by the time 10:30 rolls around, the spread's $1 to $1.05. You paid $1.25. The stock's in the same place, and you paid 20% too much. Again, why I wait, why I look for discounts. When I'm going to buy something, I take the price I'm going to pay, $200 for this contract. Let me subtract 12%. Instead of paying $200, let me pay $176. So I get it. The contract's selling for $200, but I'll put in my bid at $176, which is $24 less or 12% less. I say 12% because when I journal everything, all of my trades, I look at when I missed entry. Missed entry means I paid $1. The lowest on the day was 80 cents. I missed calling the bottom by 20 cents. I paid $400 a contract. The lowest on the day was $300 a contract. I missed by a full dollar, which is 25%. So that's what you have to say. When you look at your phone on Robinhood, Webull, Moomoo, and it's like you're down 19%, you say to yourself, the next time I enter a contract, whatever I'm going to pay, I will bid 19% less. Now, the same is true when you exit. And I spoke about exit strategy towards the beginning. But when you exit and things are going your direction, and I did this last week, I mentioned I was going to sell one of my lotto plays that I was in at 14 cents at 21 cents on Friday. What did I do? As I saw it going in my direction, I actually nibbled. I got $23 per contract, an extra 10%. Now, later in the day, that same contract went to $40. So I definitely left an extra 50% on the table, but I made a solid trade. That's what I was happy with. Again, so come up with two strategies: bull strategy, bear strategy. Watch the market, no emotion. You don't have to guess and say, this is what I think is going to happen. You could say it, but you don't have to. No one's holding you to it. You could change your mind at any time. You think you're wrong about a trade and there's supporting evidence saying you're wrong, then you get out. You're like, okay, I'll take the loss here and I'll flip it. Don't chase, don't over leverage. And I'll see you guys tomorrow morning, 8:30. We do this every